Morning, Steve Fried in Chicago with the morning grain comments. Markets overnight are a little bit easier. Beans down maybe 5 cents, corn unchanged, wheat down 2 cents. Outside markets, dollars higher, most commodities are lower, U.S. stocks are lower. I think the market is reacting to some of the conversation in Washington yesterday that the two parties are now opposite in some of their negotiations on trying to avoid the fiscal cliff. As we get closer to the end of December, there will be more and more discussions. 14 top CEOs will be visiting the president in the White House today to discuss many topics. Number one will probably be the fiscal cliff. So they are working on trying to fix this, but right now it seems like they're kind of wide apart, and that's negative to commodity prices. Other than that, we're watching weather pretty close. The drought monitor index this year versus last year shows that the dryness that last year was across most of Texas has expanded north and east to include Nebraska, Kansas, Iowa, Minnesota, and most of the Dakotas. The weather forecast for the next 30 to 60 days is mostly dry for those areas. So we could be looking at going into the spring with very dry soils for the 2013 crops. We also have winter wheat crop ratings in those areas the lowest ever, and so there is concern that we could draw down the hard red winter wheat crop to a level that we saw in 2007 when nearby Kansas City futures traded as high as $13.70 a bushel. So we're kind of looking at, on one side, U.S. weather as a positive or potential positive, and fiscal cliff as a possible negative. The path of least resistance right now, as far as prices and nearby prices are concerned, probably will be a little bit higher. We bounced back to some key resistance level in corn, beans, and wheat. A trade over that could bring in more speculative buying. Other than that, we don't really have a lot of news in the marketplace. Volume's kind of shutting down a little bit as it does at this time of the year. It is interesting to note that we do have recently seen a rally in soybean prices from the end of November to the end of December, and I would gauge that to be mostly due to the increase in demand, especially to Asia. As always, these are my thoughts, not those of ADM and ADM Investor Services, and have a safe and profitable trading day.